What if I told you that having a pre-existing medical condition doesn't automatically mean you'll be rejected for insurance in Singapore? Many people assume that once you've been diagnosed with something like diabetes, hypertension, or even asthma, it's game over when it comes to insurance. But that's not true. While it does make things trickier, you still have options if you know how to approach it. In this video, I'll explain what pre-existing conditions really mean, what happens when you apply for private insurance, and what your alternatives are if you get rejected. By the end of this video, you'll know exactly what steps you can take to protect yourself financially, even if you're living with a medical condition right now. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. So, before we look into the options, let's start by clearing up one important question. What exactly counts as a pre-existing condition? A pre-existing condition is any illness, injury, or diagnosis you had before your insurance policy began. This can include chronic illnesses like diabetes, high blood pressure, or heart disease, mental health conditions such as anxiety or depression, respiratory conditions like asthma, and past injuries or surgeries that could cause future complications. So, why does this matter so much? Because insurers see pre-existing conditions as higher risk. This usually means higher premiums, your conditions might be excluded, or sometimes even rejection. And without coverage, you could be left footing the bill for hospital stays, surgeries, or even medication. But don't panic. In Singapore, you're never completely left out in the cold. That's because of MediShield Life. MediShield Life is Singapore's national health insurance plan. It covers every Singapore citizen and PR for life, no matter your age or health history. Its role is to help you manage large hospital bills and certain costly outpatient treatments like chemotherapy. It won't pay for everything, but it reduces the burden significantly, especially at public hospitals. If you already had a serious medical condition before MediShield Life began, you might pay slightly higher premiums for the first 10 years. After that, you go back to the standard age-based rate. So MediShield Life gives you a foundation of protection. But because healthcare costs are rising, many people choose to add private insurance for more comprehensive coverage. So let's look at what happens when you apply for that. When you apply for private insurance, the insurer will go through something called medical underwriting. They'll look at your health records, and based on that, one of the few things can happen. You can be accepted without conditions, so this is the best case scenario. You pay standard premiums and your conditions are covered. Or you can get loading, which means you're accepted but premiums are higher because of your risk. Or you can get excluded, so you're covered but not anything related to your condition. Or you can get loading and exclusions, which means high premiums and partial coverage. You can get postponed, where they delay your coverage until condition stabilizes, or rejected if the risk is too high. Here's the key takeaway: don't give up just because an insurer is not willing to cover you. Every insurer has different risk appetites. One may say no, but another might cover with only small conditions attached. Talk to a financial advisor like ours who can try to get you coverage from multiple insurers. That's probably your best bet. But what if no standard insurer works out? That's when you turn to specialized plans. If traditional plans don't work out, you still have other paths. Look for guaranteed issued policies. For these type of policies, everyone gets accepted with no medical questions asked. The trade-off is higher premiums, lower coverage limits, and waiting periods. You can also look for condition-specific plans. So these target illnesses like diabetes or cancer, focusing on treatment, medication, and complications. There are also policies designed for those with already specific conditions. I would really name drop a few, but these changes every so often, and by the time you see this, it might no longer be available. So be sure to reach out to us and we'll check for you in real time. You also have group insurance, often provided through your employer. Group policies usually don't require medical checks. This makes them one of the easiest way to get covered if you got health issues. If you can't get insurance due to a medical condition, the next step is to prepare financially. Here's what you can do. Number 1, build a bigger emergency fund. So instead of a 3 to 6 months, aim for a 6 to 12 months of expenses. As you're most likely to need to fork out more cash for healthcare, it's best to have a bigger buffer here. Make sure to put your emergency fund in a place that gives you liquidity and high interest. Otherwise, you're losing money just by keeping it in the bank. I have a video on the best places to store your emergency funds. I'll link to it in the description below. Number two, invest strategically. If your health allows and you're catching up financially, consider investing more aggressively to grow your buffer, especially if you have a longer time horizon. This is because between 2004 and 2024, the medical inflation rate in Singapore is about 2.24%, and the Life Insurance Association predicts that the medical inflation is expected to be 16.9% in just 2026. This is attributed to an aging population, higher pharmaceutical costs, higher manpower costs, and even advancements in technology. So just putting your healthcare funds in the bank might not be enough. For those who are healthy, they only need to be concerned about having enough for retirement. But if you have a medical condition, you need to make sure you have another portfolio just for long-term healthcare needs, because healthcare costs are the highest during retirement and you might not have proper insurance for it. Number three, stick to class C or B2 wards in restructured hospitals. Anything in higher wards will require more deductibles and higher copayment caps. Doing this will minimize out of pocket cash expenses due to hospitalization. All this won't replace insurance, but they ensure you're never completely unprotected. Now, some of you may wonder, if insurers might reject me, why not just leave out my condition? Please don't. Lying in your application can backfire badly. Insurers can deny your claims, can cancel your policy, keep your premiums, make it harder for you to get covered in the future. And in some cases, it can be even treated as fraud. But how would insurers know? Well, insurers talk to hospitals and they talk to other insurers, and they will find out. So don't take the risk. The bottom line is, always declare your health truthfully. That way, you know your coverage will stand when you need it most. Alright, let's wrap everything up. Can you buy insurance with pre-existing conditions in Singapore? Yes, but it takes effort and planning. Here's the roadmap. Start with MediShield Life. It's guaranteed. Check with multiple insurers. Explore specialized or group policies. If coverage still isn't possible, focus on building strong financial buffers. The most important thing is, even partial coverage is far better than none. And the earlier you take action, the better your chances. If you like help navigating your options, I'll leave a link in the description to connect you with one of our trusted partners. They deal with these cases daily, and the best part, it's free to get advice. If you found this video useful, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching. I'll see you in the next video.